Good morning, everyone. I'm David Paul. I'm the Managing Director of VectorVest here in the UK. I want to talk this morning during the American holiday, which is essentially going to be a long weekend for markets between now and next Monday. Four mistakes that I've noticed from looking at retail accounts for the better part of the last 30 years, both in the UK and in South Africa. So four mistakes that cause trading pain. But before we go to that, I want to have a look at the American market. It's closed today, as you know. That's the VectorVest composite, folks, of the American market. And down below the price, which is in a long-term buy signal, the blue lines are market timing indicator, and the green line study is our buy-sell ratio, our measurement of the breadth of the market. Now, both of those are in an overbought reading. They're not showing any divergence. Divergence simply means that the price of the index or the composite is rising, but the indicator is falling. But nevertheless, they're in an overbought situation. So I advise, and I've been advising our clients not to take any long fishing trips, because a bit of bad news and this can snap back on us. But the trends are strongly up, and I've built, since that last buy signal, I've built a reasonable amount of positions in the American market. That's the UK market, showing pretty much the same thing. The long-term trend of the market is up. It's had a great couple of weeks, as you know. But yet again, in the UK, our momentum indicators and our breadth indicators are showing that this market is toppy and stretched. So just be careful. Watch stop losses. I'm holding all my positions pretty much since April. And they're all going reasonably well. I've given back a little bit in Games Workshop, that's for sure, but I'm doing my best to try and play a long game there. And unfortunately, you have to handle the pullbacks in the long game. So that one disappoints me a little bit. But apart from that, the rest of them are going well. So four mistakes that stop you from making consistent gains. Well, the first mistake, folks, is that impatient traders are attracted to the money. But patient, consistently winning traders are attracted to the process of trading. So you may think that we're in the stock market to make money, and that's certainly true. But folks, if you think of anybody that's good at the top of their game, a pro golfer focuses on perfect execution of this one stroke. If they focus on that simple act, then the money and the tournaments will take care of themselves. So your job as a trader is to focus on perfect execution of this one trade. And when you allow your mind to move to the past, where you review a mess, and you allow your mind to move to the future, where there might be a mess, then you tend to become very emotional indeed. So your job is to focus on perfect execution of this one trade. If you do that, then the money will take care of itself. Very difficult to focus your mind in this moment as this little bar is moving up and down. That's the first mistake. The second mistake is huge, which is the whole concept of you get two for the price of one, buying stocks that are falling. And of course, all over the media, we're encouraged to do that. Chaps say that they're cheaper. You can buy more shares. You can pound cost average. Pound cost averaging may work, folks, on exchange traded funds. They may work on the overall index, but on single shares, they can dig you into a big hole. For example, Wirecard in Germany, Marconi fell from £14. It was a bellwether of the FTSE to about 10 or 20 pence. So buy shares that are rising, okay? The fourth mistake, of course, is holding on to losers too long, which is pretty much the same thing. When I do the seminar at VectorVest, I asked everybody which is the biggest problem they've got, and invariably is holding on to losers too long, where you don't have an exit plan. So certainly when you put on any trade or any investment, in our opinion, you should have already calculated where you're going to exit if the darn thing goes wrong. VectorVest calculates a stop loss for every share in the market every single day. That's a good starting place. Swing traders may want a tighter stop loss than that. Maybe long-term traders want a looser stop loss than that. But nevertheless, as you put the trade on, your job, you should have worked out where you're going to get out if you're wrong. Ladies and gentlemen, as soon as you get into that investment, you are no longer, in my humble opinion, an analyst. You are a risk manager, and it's all about managing the risk of that position. The first step to manage that risk is to analyze and work out exactly where you're going to get out if the damn thing goes against you. And the fourth mistake, of course, is to ignore market direction. We believe at VectorVest that there's a really great time to be in the stock market, and there's a really awful time to be in the stock market. And my simple metaphor for a market is this roller coaster where I haven't been on one in 40 years, but they take a long time to get up there and they fall very quickly indeed. So any of you that have been on them more recently than 40 years may want to email me on that. I can't imagine much has changed. Markets are exactly the same. And that's the London market over the last, 15 months or so. That run up started in January 2019, and it fell out of bed, as we all know, in February, March. And there was a great time to be in the market now since April. Our base portfolio, what we call our worry-free portfolio, is up 30% since April. So in terms of my 4 mistakes, focus on perfect execution of each and every trade. If you focus on that execution in relation to your trading plan or your trading process, then the cash will take care of itself. At VectorVest, our trading process is very simple. We find undervalued shares that are growing their earnings strongly, that are rising, and we want to buy them when the general market is rising. And VectorVest puts a number to all of those things so that you can scan for that and make the investment process easy, so that you can focus on what's really important, and that's risk management. Like everybody else in the world, we have a Black Friday special. It's a 30-day full trial of VectorVest, the whole world, UK, USA, AU, Canada, and Europe. And it's normally £5.95, but if you want to take a full trial of that, for the next couple of days, that's 99 pence. If you go to vectorvest.co.uk, you'll see free trial or see risk-free trial. Click on that. After that, if you care to go ahead, VectorVest World is invoiced at £49 a month. It's on a month-by-month basis, but if you don't find it's worth your while after the first 30 days, then stop it. We are the only education provider and software provider in the UK that's fully authorized by the FCA. So no problem stopping it. Just focus on those 4 mistakes, folks, especially doing your best to find a process, and then for the rest of your lives, focusing on perfect execution of that process. With that done, the cash will take care of itself. Thanks very much indeed.